Welcome to my morning report on Friday the 19th of June with me, Rich Perry, market analyst at Handtech Markets. European trading sessions actually got off to a reasonably positive start, and that has been driven by this strong move that we saw overnight on Wall Street. NASDAQ pushing to all-time highs, S&P 500 up 1%, and that has come on the back of the dovish Fed, the traders taking the Fed meeting, the FOMC, on Wednesday night as a fairly dovish view, and it looks like the chances are that they're going to struggle to fit in two rate hikes in 2015 now, and the markets have taken that positively, pushing strongly higher. Wall Street up overnight, and Asian markets again this morning positive. That has helped to drive the European trade higher as well. Interestingly enough, what we have got is the position is that Greece remains under pressure, and the negotiations are still unresolved. There's a capital flight across out of the Greek banks, apparently €2 billion worth of capital withdrawals on Monday to Wednesday, and perhaps even as much as another billion yesterday. But it would appear that the bond markets are taking it fairly much in their stride. Where are they? Come on, Richard. There you go. Look at that, the German 10-year. It's settling down, interestingly enough. And you'll see that happening also across the peripheral bonds as well, in terms of, say, for example, Italy, Spain, and Portugal, all basically just settling, interestingly enough. So it seems as though that these bond markets are just beginning to settle down, and that's allowing equities just to take a little bit of a leg higher today, I think. The other interesting move is the fact that this dollar has started to rebound. You had that sharp sell-off on the dollar index following on from the FOMC. We've now started to see a bit of a retracement, and that is being shown across all these forex majors today. And I'll talk you through them in a bit, but some very interesting moves that we're seeing. My chart of the day, Aussie dollar, and also the euro, some interesting moves there. There's not a great deal of economic data out today. There's a little bit of UK public sector, public debt announcement at 9:30, but other than that, we're sort of moving out towards the Canadian inflation data, CPI for Canada, at 1:30. Then that's forecast to come in for the annualized at year on year at 0.8%. So basically in line with what it was last month. But other than that, there's not a great deal. So that would suggest that it could be a little bit more of a technical move, but also moving around on this Greek news. Any sort of updates? In terms of the Eurozone, Eurogroup finance ministers, they couldn't come to an agreement, so they're basically now there's an emergency summit on Monday that you'd hope that they could come to some sort of agreement, but certainly looks increasingly unlikely, and the potential for a messy default on Greek debt to the IMF is becoming fairly likely now. But we'll wait and see how that all goes. But at the moment, we're seeing a little bit of dollar strengthening, but also equity markets are positive as well. So that takes me on to my chart of the day, which is the Aussie. Now, we had this this big resistance, actually, 78.20. Big resistance, and that's failed again yesterday. It was so close. It spent so much of yesterday looking to break through that resistance, that barrier that's been in place throughout June. Every time it comes up towards that sort of 78.20 area, it starts to fall away. That is a pivot level around 78 figure anyway from the old lows of May, but 78.20 was the reaction high that we had on the 3rd. And it pushed through that on an intraday basis, but again it closed back below it, and it was so close, but it just failed again, and it just seems as though it's fallen over again. Look at these momentum indicators, interestingly enough. RSI failing at 50. Stochastics beginning to roll over. MACD lines never really getting above neutral. So interestingly enough, we're seeing this happen. So could this be a sell sign? Because the fact is that this resistance is obviously fairly sizable and holding back the Aussie from this advance. It's failing at this level. This is the intraday hourly chart. you can see the level of resistance that was in place, but it did break up above briefly, but failed back below it. So it's sort of now into correction mode once again within this band, and it's sort of pulling back towards a bit of a support band now. 7740 is a historic band of a pivot level, but interestingly enough, 7720 as well in the last couple of weeks has been a pivot level. So 7720 is sort of my first sort of line of support I'm looking at. And then beyond that, you're looking at the 7640 mark, which again is a pivot level actually, or at least a line of support comes in around that 7640 mark, capturing several of these lows as well. So couple of levels for you to work with there, but the disappointment is fairly sizable. I think that the Aussie could not break out yesterday. For so long yesterday morning, it was trading nicely above that breakout level, but it then failed into the afternoon as the dollar has started to strengthen again. And if the dollar does continue to strengthen, then it's going to pull this Aussie lower. And the momentum indicators certainly failing at their at these key levels seems to be that may well have lost momentum already in this rally. But certainly, if the stochastic starts to fall, RSI starting to fall as well, it could well be that we could see further further failure, and down to the downside of 7640 tested again. Those kilos coming in around 76 figure, which is basically the kilos from all these sort of lows that we saw in March and April time. So that's my outlook on the Aussie. It seems to be that the rally has failed again. Anyway, I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.